you. And my name is Ola. And basically, in these sessions, we talk about money news that affects you and how you should position yourself. We do this every Saturday, West African time at 9 a.m. And this week's episode is going to be quite interesting because we do have a lot of interesting things happening. So let's get right with it. And of course, if you are listening in, hello, please, you're welcome. And I would love for you to state where your name and where you are joining in from. Because we're really trying to build a community with this. And so let's jump into it. Now, we'll start with global news, right? There was news this week that the US economy grew by 2.8%. And it was like it grew higher than expectation. So the expectation was about 2.1%, but it grew slightly higher than that. And what is exciting about that is that despite the fact that unemployment is not as great as it should be, people are still spending, and then government spending on defense and so and co also drove the economy. Now, what does that mean for you as an individual, regardless of where you are in the world? The first thing is to know that America currently is like the financial capital of the world. So whatever happens in America is going to affect your country's economy regardless of where you are. So if the US economy is growing and inflation is improving slowly but surely, what it means is that is making a stronger and stronger case for the Fed to reduce interest rates. Now, what does that mean for you? What literally happens is that when interest rates are low in America, then capital can flow around the world. That is what has been happening, right? Why? Because people can borrow cheaper. And once they've explored all the assets and flogged all the assets locally in America, they begin to find other markets to invest their money. So, generally, what happens is that when interest rates are low in America, capital flows out. And when interest rates start getting higher, capital begins to flow back towards America, and then currencies begin to devalue, and then America's currency becomes stronger, and there's just that reversal. So what everybody has been waiting for is for the Fed to actually start dropping rates. So with this GDP that is growing faster, oh, sorry, let me even explain. GDP is actually a sum of all the production, all the value that was exchanged in that quarter in a country. So it is the sum of the value of the goods and services that were exchanged for money in a quarter. And when they say there is a recession is that um, the value of products and services that were sold or exchanged or delivered in one quarter and then the next. When there's a recession, it means that um, it's dropped two quarters in a row back to back. Then you see there's a recession. That's what a recession is. And when a country's economy is growing and you start seeing that trend where GDP is gradually improving, then it means that people are spending. It means that money is moving around. And once money is moving around, people get better. As long as money is moving around, people can get more jobs. Because I mean, if people are buying more from you, at a point you grow to a point where I need to hire somebody else, then unemployment numbers begin to improve, or employment numbers begin to improve. Right now, that's GDP. So America's GDP has improved quarter on quarter, and then inflation is also tapering. Now, what does that mean? Interest rates, they were getting closer to that point where the Feds begin to cut interest rates. Now, when the Feds begin to cut interest rates, what happens? People have cheap cash, they can buy more of assets, they can invest more. But what happens is that the person who was able to borrow or to invest before cash became cheap will be the one selling when everybody else is trying to buy. What does that mean? You cash in on profit. So if you are on the investment side of things and you're sitting on the sidelines, right? This might be a good time to start looking for those assets to pick up, whether it's stocks, whether it's real estate, all those assets, even bonds, all those assets will be affected by that reversal in the flow of currency. So that's for America. Then in second news coming out of America, I'm sure everybody knows, but we just thought to mention and highlight the economic impact, right? Is that Biden stepped down and he's endorsing his vice president, Kamala Harris, right? For us, what does that mean? It becomes a stronger case. There was just this whole thing where everybody thought he was going to slide in the other direction, but now the game is on. But what does it do for the economy? it brings more uncertainty, right? People that were like, oh, this person is definitely going to win are now thinking, okay, maybe not, maybe there's a chance. And if there's a chance, what are the implications? We've talked about this. I mean, you can watch previous videos on how you analyze governments. And we did that when we were talking about the UK government and the UK elections and the new person that was coming, Labour Party that won, and how you have to go and look at what that person stands for and what that person is promising, and that their tone when it comes to taxes, when it comes to funding, when it comes to people support. And if there's going to be any change, how will that change affect you? So, whilst we are looking at the political part, which is not really our forte, right, in this community, we are looking at the money impact and we're saying, okay, if Kamala wins, what happens? And if Mr. Trump wins, what happens in terms of the economy and economic drivers? And that's what you should be looking out for. Also, bearing in mind that US is the financial capital of the world. So whether you think what's my own, I mean, my country, nope, it's going to affect you some way or the other. So you need to look into what they're actually saying and what they are promising and what the odds are and how you should be positioning yourself. If you have been thinking about buying a property in America, for example, then you're looking at who is more open to you getting a visa, you know? And so if you're not sure you'll be getting a visa, with this person coming, perhaps you should be talking about getting that visa right now before any changes happen, if you get my point. That's how you analyze these things. It's not just news. You have to think about yourself and how you should position yourself in the light of what may happen. Got that. Now, this is just a gentle reminder that this is powered by the Money with Club. The Money with Club is a community of working professionals where we learn about investing and we actually take actions. So for us, we bring, in terms of taking action, we find investment opportunities and we've done all sorts of things. We've invested in creatives, we've invested in wine, we've invested in art, we've invested in property in different countries in Africa. We've also invested outside of Africa in different currency, GBP, USD, CAD. Yeah. And so if you need to learn about investing and actually take action, like where do I actually plug my money? Then the Money with Club is your plug. Check us out, www.themoneywithclub.com. And if you have any questions, feel free to reach out to us on our social media handles and ask them. Yeah. So off to Africa news. So in Africa, last week, Cameroon issued a $500 million dollar Eurobond. It was quite successful, but it was issued at 10.75%. Now, what does that mean? First of all, understand that Cameroon is a francophone country and its currency is CFA franc. So the francophone countries have a common currency, which is good for cross-border trading amongst them, right? But then the catch with CFA franc is that it is tied to the euro, right? So if, for example, it's pegged to the euro, so if there's a peg or maybe 1 to 10 random, don't quote me, right? It means that if the euro against the dollar goes up, then the CFA franc against the dollar is going to go up, and if euro against the dollar comes down, CFA franc against dollar is going to come down. So it's pegged. So with that, if you're investing in Francophone Africa, it becomes more like you can plan your finances because the euro is a stable currency. Now, putting into the context of this, what have they done? They have raised $500 million at 10.75. I dare say that that is very expensive for a currency that is, for a country that is pegged to the euro, right? But it just shows how much impact the tightening and the lack of liquidity globally is affecting countries, because 10.75% on dollar terms for 7 years is a lot of money. It's quite expensive, but things are really tough right now for different countries of the world. However, for you as an investor, I'm talking about the fact that the Feds will probably at some point drop interest rates such that when they drop those interest rates, things will become cheaper. Cash should be cheaper. This 10.75 can now become 6. So for you as an investor, whilst it's like, oh, things are really tight, if you have money, then you should be jumping on things like this. Think about it. Like, are you waiting for when it is 6% and everything now looks good for you to start investing? At that point, the person who invested at 10% will still be earning their 10% return, or almost 11, I dare say, return. So these are the kind of things that you need to be thinking about at this time. Yes, there's a lot of noise. Yes, there's a lot of things that could be better, but what are you plugging into? And in the club, how do you access francophone investments? First of all, it's a Eurobond. So with a Eurobond, it will be listed. Any Eurobond trader would have it on their list of Eurobonds. It can be traded on Bloomberg, and you get your bond in your custodial account. All these things I'm saying, join the Money with Club. We'll get it done for you. Yeah, but that's how you get in it, right? And then also I remember that we did have someone come speak with us in the club about investing in francophone Africa and the opportunities in the stock market and the debt market and all that, and the stability of the currency. So yeah, francophone Africa is here. It's something that people that speak English don't really think to, because they don't know how to break into it, but there are ways and we can find it for you. Now, off to Kenya news. We know that, I mean, if you follow East Africa news, Kenya is like one of the top countries in East Africa region, economy wise. And the Kenyan president, they had the protest. The Kenyan president fired his whole cabinet, and he's trying to rebuild the cabinet. And I dare say some people have been saying that he should resign, which doesn't make sense. It's just instability. Calm down, calm down. You just need progress. Just push him to give you the progress you need. Yeah, resigning is not going to help anything. Amen. So yes, now what has the president done? He has brought the opposition leader who was fighting the tax. I say, okay, you were fighting this tax that I was proposing. Come and solve this problem. Come and use that brain that you have, and because that was quite interesting. Yes, there's some things that, I mean, you fire your whole cabinet. There's a gap in leadership at this point, and people are waiting for him to fill in those gaps with people. But at least he has named his finance minister, and we are looking forward to the progress that will come out of this, and we hope that it is speedy enough to calm down the youths that are really clamoring for change. However, the caveat is that policy is always long term. Policy, you hardly ever um, deploy policy and see the impact immediately. So people might just need to chill and give them some time. But we look forward to Mr. John Mbadi's time, and we hope that there'll be some significant progress under his watch. And then finally, down to Nigeria, my home country. Um, the Senate passes the Finance Act Amendment Bill and increases banks' windfall levy to 70%. Now, what is that? Go and watch last week's video. We talked about it and we explained the impact. We explained what it means for shareholders. We explained what it means for the banks, the economy as a whole, and foreign investors. Now, one of the things that we said last week was we're not sure about the legal basis. Like, what is the legal basis for this move? You can't just arbitrarily slam people with tax. But what we have seen is that, yes, they have gone to the Senate and they have gotten it signed. And once it's signed, it's done. It's done. It's a law. And now what they have done is that they've done a 3-year window from 2023 to 2025. They increased it from 50% to 70%. Now, let me explain from another angle. Last week I talked about the economic impact and stuff. But what is windfall tax? Windfall tax is basically and it's not new to Nigeria really. When there's some extraordinary income caused by an external factor, right? The government creates a particular tax to benefit to draw out of that fund to benefit some people. So for example, after the pandemic there was a massive spike in oil prices, and so oil and gas energy companies made a lot of money, extraordinary profit. So for example, in the UK, there was a windfall tax about 20% on energy companies, right? And it was used to like cushion the impact of the cost of energy prices on individuals, right? So it wasn't within their control as a government, but it wasn't their fault. It wasn't something that was created by them, but the companies got like an excess income in that period, so they had charged like a one-time tax on them and use it to augment the impact of increased energy prices. But Nigeria is quite different because the problem that created this windfall was, in quote unquote, a fallout of government policy or the lack of it, or ineffective policy, right? So you create a policy that is ineffective, it produces extraordinary income for some certain class of people, and then you now slam them with taxes, 70% of that, and it's now being applied retrospectively, meaning that 2023, 2024, 2025, you are going to be paying those taxes, all right? And you've already declared your financials are closed. The books of accounts have already been sent. The books of account need to be sent by April, and you now come now with this. It's quite interesting. The fact is this, windfall is tax in itself is not bad. Um, but in this situation, it's supposed to be used to fund the budget deficit. There's a supplementary budget of about 6 trillion, and it's supposed to be used to fund that, right? Yeah, is it 6 trillion? Yes, 6 trillion is supposed to be applied to fund that. Good, but let's see how it goes, right? If you want to know the impact from an investor perspective, you should also have seen that the stock prices of banks have actually dropped on the back of this news, because the profit numbers you declared is not the profit numbers that's going to be, because you're going to have to restate your financials by the end of this December. The financials that they would release this December is going to, it will have 2023, 2024. 2023, you'll see they'll be different, right? So it will affect the stock markets, and you can see that. But if you want like a breakdown of the impact as an investor, go and watch last week's video. And then finally, the federal government is saying they are going to do a diaspora bond issuance in August. There has been whispers about it. They've been talking about it, and basically what they're saying is that there is a massive capital base outside of Nigeria, Nigerians outside of Nigeria, and they want to tap into it. At some point, they had talked about using domiciliary account balances that people in Nigeria could invest, and there was a lot of feedback around that, because you might end up pushing, because the return on this investment should be good. So you might end up making more people convert their naira to dollars to be a part of it. But now they're coming out to say they're going to focus on diaspora only, which does make sense. So we are looking out for the information. We expect that it should be have a low entry point. That's one. And then we also expect that. Hey, hi, business online. Sorry, I'm just seeing that. I just got a notification. So we also expect that it should be higher return than what we um than a Eurobond for a shorter tenure. That is it. So it should be exciting to invest in, and it should be such that to attract people. But then I would expect that it should restrict it to offshore, meaning that no clear Nigeria. It should be traded in Nigeria, and people in Nigeria shouldn't have access to it and all. And this is the news. We look forward to more on that. And of course, when we get more information, we'll break it down. So if you're in Nigeria and abroad, maybe next we can unpack the impacts for you as an investor, and if you have more information like the risk management of it and all that. So stay tuned. Yeah. And thank you so much. This is where we draw the line for this week. We look forward to hearing from you guys. Follow us on social media. Yeah. And see you next week. Bye.